Now, even Morgan Stanley believes that humanoid robots are going to take your job.
And it's not a question of if, but when. And should you be worried? Absolutely. Now, this isn't a work of science fiction. It's actually moving markets right now.
So today, just for you, we're breaking down the huge institutional report from Morgan Stanley, which is shaking investors.
We'll show you the risks and opportunities and how this could impact your portfolio.
This is going to be the future of work and potentially unemployment and maybe of investments.
There is a whole industry of Uber drivers who are effectively going to be able to be replaced.
Fundamentally, this is something that's coming and nobody has any control over because big corporation, if it's cheaper, it will win.
We're already seeing over the last few decades birth rates decrease massively.
Fundamentally, people can't afford to have children.
Exactly, but also now I think that if more and more people are going to become unemployed, automated robots, humanoid robots could actually accelerate that birth rate decline.
Let's get going with, first of all, the meme of the week. So the meme of the week is this, I mean, it is a meme, a proper meme, because it is everywhere. This geezer with the worst haircut of all time.
He looks like a mushroom, doesn't he?
Honestly, it is. This stuff I don't get, right? I'm going to show, it's going to be old here, but, you know, this guy, someone just took a picture of him in Ibiza. We're talking about the Ibiza final boss, by the way. Someone took a picture of him in Ibiza because they're taking the piss out of him, basically. Fundamentally, that's the reason, right? And he's now becoming rich off the back of it. But anyway, the meme tweet of the week is about, shockingly enough, there's a meme coin, right? As soon as this happened, meme coin out. It's called Boss. Now, he did pull it, right? There was a rug pull on it, but it's managed to sustain itself.
They're all rug pulls.
Yeah, I mean, every meme coin's a rug pull eventually, right?
World, look, it's a sheer gamble. Everyone knows what it is. And you know what the risks are when you're going into it. Every single meme coin gets rug pulled.
Yeah.
There is absolutely no, exactly. It's a when, not if situation.
Yeah.
And so it's a fastest out of the door type thing, you know. At the end of the day, it's a gamble.
Yeah, you get in, you punt, you make money very, very quickly, or you just...
But you know what? I quite like the fact that he's gone and done something extremely weird. Like, I wouldn't do it.
No.
You know, but he doesn't care.
But also, this guy's got to make his... modern world, modern celebrity world, right? Now that's supposedly a celebrity. What's going to happen is the media will kill him at some point. You know, they'll just completely batter him down. They'll go in his backstory, find out something about him. It'll be all over the papers.
Well, his dad's a drug dealer.
Well, there you go. Right? So that's already out there. So it'll get done, right? Yeah. Eventually, the media will bring him down. It's what we do in this country, right? Someone gets lifted up. I mean, he's done nothing, but someone gets lifted up, and then the media beat them down until they're nothing. I mean, but this guy's got to monetize this, right? I mean, he's basically been taking the piss out of, and then it's make some money out of it.
It's a bit of a laugh.
But meme coins allow you to, you know, allow retail traders to, you know, it allows them to lose all their money, but potentially make some as well. So
there you go. Everyone knows what it is.
But yeah, let's go from the Ibiza final boss to everybody losing their jobs to a robot.
Yeah, it's a nice kind of contrast there, isn't it?
Yeah, exactly. Yeah.
I read this report from Morgan Stanley last week, and it made for really, really quite sobering reading. It stated that a robot will be able to do the job of two people at $25 an hour.
Yeah.
For $5 an hour. And this is already occurring.
Mm. I mean, this has been occurring for years, right? Because you look at factory assembly lines, there've been robots for years. Now, I know we're talking about actual humanoid robots here.
Yeah.
But AI and robots have been taking people's jobs for the last 30 years.
Yeah, exactly. But, you know, it even goes down to things like Waymo, for instance, and robotic cars, you know, Uber looking into robotic automation and automotives. I think the real thing here is the cost differential that is going to make it completely unavoidable for companies to shift to this new technology. Now, what that's going to do to human capital is probably quite diminish it. And there's only one way out of it. If we go back to the Uber example, it's going to decrease the cost of a ride per mile. Yeah. This is all stated in the Morgan Stanley report, from $2 a mile to 20 cents. There is a whole industry of Uber drivers who are effectively going to be able to be replaced. Yeah. The same way Uber replaced black cabbies in London, for instance. You know, they're still around, but most people prefer to just use an Uber these days. Now, there's one way to get out of this, which is governments are going to have to push so hard on retraining that it is going to be a real shift in education,
Yeah,
I
but
think.
what you can't ever, and human nature shows this, right? You'll never be able to retrain someone to be cheaper, you know?
No.
So fundamentally, this is something that's coming and nobody has any control over, because big corporation, if it's cheaper, it will win. You know?
I'd say so.
And what's really interesting about that report I found, it was said, one of the lines in there said, have you been served or seen a robot today, right? And most of the time the answer is no. Now, these autonomous cars and autonomous rides are coming to the UK, right? Already in San Francisco and wherever they are, right? And what's really interesting is people who say, "Oh no, I'd never get." You speak to people here now because it's not here. I would never get in an autonomous car, you know. And that report, and I probably said the same thing. Oh no, it feels weird. But what that line in that report said is like, you know, you ask someone in 1903 what they'd say about getting in an airplane. I'd never get in an airplane.
I made exactly the same point as well. It was like someone who was riding horses in, you know, the Victorian era would have said about cars, this is insane, no one's going to use them.
Yeah.
I think one of the really interesting things about what could come is that we're already seeing over the last few decades birth rates decrease massively. Now, there's many reasons for that, you know, elevated house prices since basically 1971. I guess, you know, already things are more and more expensive.
Fundamentally, people can't afford to have children.
Exactly. But also now I think that if more and more people are going to become unemployed, automated robots, humanoid robots could actually accelerate that birth rate decline. Now, there's an economist.
So, sorry to interrupt you there. Just for 1 sec. So, do humanoid robots save the planet? Because there's too many people, right? There's too many people on the planet.
That's what I was going to get onto. So there's an economist called...
So I shouldn't have basically interrupted you.
Thomas Malthus, who basically does population economics from 200 years ago or something. And his argument is based on, you know, the planet is overpopulated even back then. And, you know, population economics is a very controversial thing.
Yeah.
Because you're basically saying, and what you tend to find is that poorer people in poorer countries have more kids.
Yeah.
Now, whether that should be the right thing to happen or not is a completely different story. But as we're seeing total fertility reduce, perhaps he's got a point, and perhaps this is actually the thing that starts to really cause that massive decline now.
Yeah.
So it's a multi-pronged issue, but it could really improve the lives of many, many people at the same time, which is interesting.
But there's the other side of this is that if you're going to start assembly lines of humanoid robots, what's the environmental impact of now, rather than the environmental impact of having children, bringing children up in the world, right? What's the environmental impact of building humanoid robots? Well, it's going to be tenfold, surely.
Well, this is the thing, is that I think Tesla, their automation line is completely automated at the end of the day. Their building line is completely automated. And Elon's very, very pro-solar. Like, he wants to install solar panels on the moon.
Yeah.
And also nuclear power plants there, which, look, Elon probably would be the only person I would put my money behind actually doing it.
Yeah.
And I think there's trade-offs.
Elon.
Yeah, there's trade-offs that have to happen and are happening. Rolls-Royce developing the small modular reactor, for instance.
Yeah.
I think we're really, really going to push onto nuclear. And that is all to set up this next 2 decades, I think, of this kind of AI revolution whereby, you know, data centers are going to be powered by small nuclear reactors rather than the national grid, for instance. And private companies are going to start having their own power plants. Whether it's based off of, you know, solar, whether it's based off of wind, whether it's based off of nuclear. I think that's what we're going to start seeing happen. And what would be really, really interesting, especially in somewhere like the UK, is if almost we started seeing mini states develop around these, you know, these cities outside of London, for instance, little towns that then end up specializing in certain things because they'll have the autonomy over their own power. I think that will start to be a really, really interesting question to start looking at.
Yeah, and I think what's interesting around this as well is the fact that where the introduction of humanoid robots, right, and robotics in general, what this report from Morgan Stanley said, a lot of it focused on space travel, right? And what's really struck me was what they said, and of course these are all estimates, but Morgan Stanley estimates on when we will have not colonies, but when we will start moving to the likes of Mars and the moon, right? So Elon's big push has always been the colonizing Mars, right? Getting people to live on Mars. And within that report, it said late 2030 is when Morgan Stanley expect to see humanoid robots on Mars, with late 2050, mid to late 2050 paving the way for actual humans to be on Mars. Probably. Now, you look at that and you think, you used to think, well, okay, it's a long way away. 2030 is not a long way away. Well, even late 2030 is not a long way away. 15 years.
Oh, 2030. Oh, 2030.
2030. 20.
That's in 5 years' time.
But late 2030.
Oh, right. Yeah. Okay.
So, say, yeah, whatever. I mean, our maths is slightly better than but yeah, I mean, this is absolute madness. But I think when you look at that, and again, talking about these small modular reactors, these are being prepared not just for use here, but for use in space travel. That what was it? It said in there about the soon to be the most expensive real estate will be the south pole of the moon.
Makes sense, right?
Yeah,
it's right near the sun.
Yeah,
so
it makes so much sense. Solar power, but yeah, it's just almost how quickly these things are moving ahead is mental. Okay, so we've got this report, we've got the robotics. As a trader, where do I profit from it? How do I make money off it?
It's Tesla and AI. Firstly, Morgan Stanley in the paper that we're referencing, they said that Tesla was the key topic that they were discussing there. Yeah.
So we've got the charts up. So this look at the charts. Well, I suppose we know what the charts have been doing, right? Tesla is one of our picks for the year. We should say that because we're absolute geniuses.
It is. And a lot of people will be scared off by its price to earnings there. It's ticking up to its prior high. For me, that doesn't concern me at all. If we look at what their Q1 earnings were, they were really, really bad. Yeah. So net income of 399 million. Q2 was a bit better. But what we're going to see going forward is their earnings probably expand from here. Yeah. Now that he's disaggregated himself from the Trump admin, I think there's going to be a lot more liberals who traditionally bought their Teslas that are going to come, buying Teslas again, basically.
Back. Yeah.
What we should see is that price to earnings compress, and what we can see is the trend is restarting here. We've seen the little coil up in the moving averages. I love seeing that, especially this in large caps.
Yeah. Coiling springs to Bosch.
In large cap stocks as well, you have to remember the way that the big players get into the S&P isn't by buying the entire S&P. Yeah. They'd maybe have a basket of the top 30 to 50. They'd have greater exposure there because it's easy to get into those large cap stocks. Yeah. And out of them, obviously. And so I would expect that price to earnings to start coming down as price is increasing, funnily enough.
This chart is, in fact, that Tesla chart is a real nice chart now. It's got every pattern that you can possibly expect going in there. That nice little pennant formation that's going in, just a nice breakout to the upside. You got the highs. It's a real nice technical chart, also, as well as everything else.
What to think of is the amount of bad sentiment that Tesla's had, and it still did not break its 2024 low.
Yeah.
Which should say something. There's a story behind every chart. And for me, I don't really look at price action or anything like that. I tend to focus on, what are other investors telling me here about what they think about a certain stock? Yeah. If you think the other day as well, it dropped a good 8%, I think it was. This was about 2-3 weeks ago.
Yeah.
It's just come back up. And that should say everything to you.
Because it just shows you that smart investment is buying the dips.
It's buying the dips and also showing that there's a certain forced buying that has to occur in the market in the large caps, which is why US equities are so beautiful and tend to have that upwards drift, even though everyone is thinking that everything should just collapse.
Yeah, and Nvidia similar. Well, not similar price, but not similar chart because it's just like on steroids continuously.
Yeah, I mean, again, if you look at the price to earnings on Nvidia and previous peaks, so what we can see is that even though people deem it to be overvalued consistently, the price over the longer term keeps going up, especially over the last year.
But this is the thing, right? I get a lot of this from a lot of retail clients who are married to RSIs, right? Love an RSI. RSI is a relative strength index, right? So it gives you overbought, oversold indicators. They look at an uptrend, and we always say, you know, up and to the right, and they go, well, it's just massively overbought, so I'm going to sell it. What are you doing?
It depends on the asset. So FX, I would say,
shorter term as well, because you're going to get more downside on the side of those.
FX is a mean reverting asset class because obviously you're buying one currency, selling the other. Lots of different noise can occur from, you know, intraday pressure from a corporate buying a ton of
a
load of
yeah,
you know, intraday pressure from a corporate buying a lot of sterling, for instance, versus the dollar perhaps, or multiple corporates. Whereas with stocks, I think there is a much better way to look at things, and it's the momentum factor. If you're able to look at US stocks as a momentum factor rather than value, rather than anything else or relative value or anything like that, you will probably do way, way better than any other factor to look at. Momentum has been the biggest winning factor of the last 15 years, I think. And all you have to do is look at a chart of the S&P 500 to see that, or even Nvidia.
Yeah.
You know, over the longer term.
Which basically is the S&P 500.
Right now, I think it has about 7 or 8% of the concentration. So, and it's statistically proven that if you buy a 52-week high, the market is probably going to go higher. And there's a bank or asset manager, called Robico, and they actually ran a study on whether you should buy bubbles or you should sit and wait. And it found that actually people lost more money when they were betting against the bubble than they did people that bought the bubble.
In the bubble.
The reason why is because only half of the industries that experienced a bubble pop, for instance, actually experienced one.
Yeah.
The rest of them had a pop, and then the price was higher 2 years later.
Yeah. Everything's always a bubble. It's
my
a bubble.
reply to people right now is, okay, if you recognize it's a bubble, why are you not in it?
Yeah, ride it. Ride the bubble.
Why are you not in the bubble?
Yeah,
If
exactly.
You know,
everybody else is in it.
But also, why do you think that the second you get involved in that bubble, it's going to be, oh, you've high-ticked the market? What makes you so arrogant to think that you with your
£2 a point spread bet?
Why do you think that you're going to high-tick the market?
Yeah.
I'm talking to you.
Okay. Well, that's robotics and how they're all going to take our jobs.
Yeah.
Soon they're going to take this this podcast as well. So let's go to the markets. Let's look at the markets.
Robot could never beat me.
I would pay to watch it. That beat you though. Today is inflation. So for this week, last week, we've got a chart that looks at last week actually, but this just focus on the big news for this week. This week we've got inflation today. Now the big story around inflation has been tariffs, right? The whole problem with Trump's tariffs is it's going to be bad news for American people because it will cause inflation and people have less money. Now so far we're seeing no inflation. It hasn't ticked up hardly at all. Now it's expected to tick up today to 2.8% from 2.7%, and you can argue that they've only really just come in. Is that the point?
If we look at 5-year break-even inflation rate, it's basically a measure of the average inflation annually over the next 5 years. We can see that since the tariffs were implemented in, what was it, May now?
Yeah, but then delayed to August the 1st.
It was May. So you can see that the market reacted in terms of inflation. It's been higher ever since then, after being in a downtrend since the start of the year. So the market is pricing in higher inflation, which is very, very interesting for the Fed, because Jerome Powell naturally has been in a very wait and see environment, whereas Trump has been like, cut now, cut.
And the wait and see is because we're going to see higher inflation.
Yes, exactly. But remember that Powell was wrong on inflation over COVID as well, coming out of the pandemic. The issue that I see is that there are many banks now saying that they see growth stalling as well. Goldman and JP actually put out papers last week on exactly this. And it's definitely contentious with what Jerome Powell's saying of the wait and see. So what I'm actually quite interested in is seeing what they say at Jackson Hole.
Yeah.
Remember a couple of years ago, they changed their framework to average inflation targeting. Now it will be very, very interesting.
And there's usually quite a big shift at Jackson Hole. If they're going to do something, it's at Jackson Hole, usually in terms of policy change.
Exactly.
But what is interesting will be today. Now, obviously, when you listen to this, it might be slightly different timing, but the expectation, if that's higher than 2.8, so if that's a beat to the upside, you've then got a situation as, does that derail Powell's plans for a September cut?
I don't think Powell wants to cut. in September.
He definitely doesn't want to cut, but
I
he's under
think
pressure
the market,
too.
yeah, the market's definitely pricing that. Yes, of course it will. And the issue they then get into is, okay, well, are we facing a real decline in growth, relative to inflation? So that would be something that is really, really interesting to see.
Yeah. Okay, so and then on last week, so we've got this chart, which to me just looks like someone threw up on the screen.
It's from JP Morgan.
Yeah.
It's just showing the rolling data of social media sentiment over the past year about different sectors in the market. So we've got last week that defensives had a massive spike on social media.
This is last week, right?
Yes, this is last week's one. So defensives, consumer staples, healthcare, and utilities. Now, one of the reasons why I think that was this massive increase in chat about United Healthcare. I don't know if you've seen it, but people are going crazy over United Healthcare like it's a meme stock now. This is the company where the CEO was murdered. And it's been absolutely battered. Like it's down 60% or something. And people are like, yeah, it's going too low. Retail investor mindset. If it's gone low already, it's likely to go lower.
Yeah.
And so social media is being awash with, oh yeah, I'm buying a leveraged ETF on United Healthcare, which is fine. It's fine to have that view.
Yeah.
But be careful when everyone is manic about a position because it's likely to get blown out.
Yeah, no, exactly that. Okay, so, I mean, are robots going to take over the world? And are you in on those two stocks that we were talking about? Let us know. If a robot has already taken your job, then unlucky. So remember, subscribe, like, wherever you're getting your podcasts, video, whatever it is, like, subscribe, press all the buttons down below, comment, even if it's an insult, doesn't matter, still helps us out.